There's no denying the fact that the global economic shutdown actually began in 2018. Central banks reduced their money printing and the financial markets began to seize. Well, now we have seen the most absurd takeover or siege of assets by central banks in the history of the world, and this is only the beginning. Create a crisis, provide the solution, or use a crisis to do things you could not do before. Either way, they win, you lose. You came here for the truth, so let me unveil that for you. Today, we're going to look at the global economic collapse. It is going on right now. People need to understand what this is. It's not just a little issue that's going to happen and then moves into the pages of history. No, we have to look at what's going on with the jobs, with the economy itself. This cannot be fixed by printing money. I've said it before and I'll say it again. I'm going to show you some resources so that you can be empowered, so that you can look at this data every single day and get the right information. This is from a website called Candor, Candor. Of course, all the links will be in the description as always. This is updated on a regular basis. Industries with the most hiring freezes and layoffs, tracking 2,200 different companies, giving you live updates. Take a look at this. The legend at the bottom here basically says the green area is hiring, the yellow is hiring freeze, and the red is layoffs. And you see layoffs everywhere right here. Travel and transportation looks like they are dealing with some serious layoffs. Retail, of course, and you can work your way down the list. At this point here, some of these industries, maybe it's healthcare for instance, they're more likely to be hiring right now, whereas others might be very uncertain. Macy's, for instance, they might be getting rid of a lot of people. The retail sector might not be doing well over the next few months. I've made the argument before, just wanted to make it again for any new viewers. There is a claim that we will experience a V-shaped recovery. However, based on the conditions of this issue we're dealing with, it just seems rather unlikely. Based on what we see economically, it isn't possible for everybody to just begin. They're back to work. They're back to the coffee shops, the movie theaters, the restaurants. People are going to be concerned for a while. They're going to be staying away. Business owners are going to be reluctant. They're going to have to lay off some more people. This is the way it is. I've got the data to show you what's happening right now. This is one to check out as well. Womply, WOMPLY, all business daily average revenue year-over-year variance. As we move through March, you can see the downtrend that has been going on, but it's not all companies. At the bottom here, it's really small font, but I'll read it to you. As you can see, restaurants and travel-related industries have seen revenue plummet, while grocery stores have seen sales skyrocket. So first of all, as an investor, you need to be thinking about these things, but for your own good, you should be paying close attention. Small companies are hit hardest. I have some data on that, but I wanted to give you this first. Micro businesses and young businesses are most vulnerable across all sectors. We're looking at this data from 2008 to 2009 to give us some insight as to what might happen this time around and next time and the time after. The red areas, the darker the color gets essentially, the worse it is. And what we're looking at here, left-hand column, employees 1 to 9, employees 10 to 249, and then 250 plus. Broken down by sector all along in here. Basically, all I'm trying to stress to you is that the smaller companies, the younger companies, they get hit the hardest. The big boys, they lay off some people. Everything's all good. This article here is talking about the economic impact of the issue we are dealing with today. People can't pay their bills, they can't pay their rent, and so on. But then it goes on further to talk about this. This particular individual said his tenants are mostly executives who earn salaries of $100,000 to $200,000 a year, yet some of them are struggling. We have already had 3 or 4 calls here in the last 24 hours. People have already informed us that they will be late on the rent. It doesn't mean that people at or below the poverty line are the ones struggling. Even those with $100,000 to $200,000 salary per year, they're in big trouble. They live paycheck to paycheck, whether that paycheck is really big or really small. Whether you're driving that BMW or you're taking the bus, in general, the vast majority of people do not know how to manage their money. They don't have the financial education, and a lot of them have been through hardship. It's truly unfortunate what's happening today. And depending on the set of circumstances that people have been through, I don't know what their personal situation is. I'm just seeing this become a problem for so many. From Nike to the Cheesecake Factory, businesses large and small are saying that they will either pay only half of the rents or default. Think about it. We are talking about big institutions here like Nike, and they can't even pay their bills. This is something that, as I've said, you can't fix by printing money and buying mortgage-backed securities. The Federal Reserve isn't doing that to support you or to support businesses. This is a takeover of the financial system. Out of the Hill, more than a quarter of Americans say they've already lost wages as the economic fallout broadens, according to a new poll. As I always say with these polls, we're only getting a sample size, but it gives us some insight. 28% of those surveyed say they already lost wages or other personal income. Another 16% said that they were laid off or furloughed, love that word, from work. And an additional 28% said they lost what they considered a substantial amount from their retirement account. So we have these people that have their 401ks, their RRSPs, their supers all around the world getting destroyed. And imagine they're at an age when they need that money. Maybe that was their little nest egg. Suddenly it got pummeled. And if it stopped here, they'd be in trouble, but maybe, just maybe, they could make do. But what if more losses will continue? Well, let's see what happens. New Yorkers get error message when filing unemployment claims. That's how many people are going to these websites. They cannot handle the strain. Just like the grocery delivery can't handle all of the people ordering on their site. They don't have the drivers. They don't have the facilities. They don't even have the food. They were not expecting this, and they can't ramp it up as quickly as people are coming in. It shows you the fragility and the vulnerability of the financial system and really everything that we use. When times are good, when it's a bull market, when there's a good situation with the jobs and so on, hey, everything runs smoothly. You get little bumps along the way, but no big deal. Then we're dealing with a big issue out of nowhere and nothing seems to work. Out of CNBC, they're actually pulling this data from market, but I wanted to give you what they had. These states could be hit with the biggest job losses, and you see it here on the map. Nevada is one of those. The darker the color, basically, the worse that they expect to be hit. But I'll scroll down and I'll give you the breakdown as they show you. States that rely heavily on tourism have already taken a big hit, including Florida and Nevada, where IHS Market Analysis. States that rely heavily on tourism have already taken a big hit, including Florida and Nevada. In the Midwest and Northeast, states that rely on manufacturing will be hurt most by plant shutdowns. Energy-reliant states like Texas, North Dakota, New Mexico, Oklahoma, and Alaska are also especially vulnerable following a steep plunge in oil prices as demand has fallen. Right now, last time I checked, oil was approximately $20 a barrel. That's not looking good for many in this industry. Rural states like South Dakota, Nebraska, and Iowa will likely fare better than most. So we'll see what happens as this progresses. I think it really depends how long it goes on for. The effects of this issue that's currently going on all around the world could be far deeper than the subprime crisis, according to this mortgage company CEO. Borrowers with government-backed mortgages through Fannie Mae and Freddie Mac, the FHA, or the VA are entitled to a loan forbearance plan under the administration's economic recovery plan. They can miss up to 1 year of payments, which will then be added back to the end of their mortgage. If unemployment gets as deep as some people are predicting, if it gets to the mid-teens, then it could be far deeper than the subprime crisis. This is huge news, and yet I really think that it is simply not being looked at enough because people don't want the bad news. What they're looking for is, which stock do I have to buy to be a millionaire? Small firms, big decline. Employment at U.S. small companies post the largest decline since 2009. This is a chart out of Bloomberg, just showing you that more of that data here. U.S. small businesses wait impatiently for government aid that could be slow to come. This is what they're relying on. Many businesses, many individuals. Please, I need that paycheck or I'm done for. This shows you how critical of a point we're at today. Job survey, 49% of companies considering layoffs, more than 1/3 freezing new hires. This is not a good sign because even though it's a survey, even though we get these polls, it's not just one, we start to see 3, 5, 10 of them, all done by different companies, all at different times, all around the United States, for instance. We're going to get a good picture of it, and that picture isn't very good. Ford delays North America production restart indefinitely. They don't even know when they're going to be going back to work. This is just one company, but they employ a lot of people. Now extrapolate that to the auto industry as a whole. They are sitting on so many cars right now. Finally, they have an excuse not to go back to work, not to produce anymore, because realistically, not that many people are buying cars right now at this time. They can sell off their inventory, but what really hurts isn't the shareholders of Ford, but it's the jobs, these middle class jobs that are so important, so integral to a strong economy, and they don't know when they're going back. Out of market, you can see output declines at the fastest pace since August 2009. US manufacturing PMI on the right hand side, you can see the chart. It is in contraction right now. I don't have time to get into the report itself. As always, they break it down, give you the data you need. Link will be in the description. Here we're looking at the ISM PMIs, which is the blue line, markets PMIs, which is the green, both looking very weak, and that was expected right now. I actually think they're probably much lower than that, but this is the information they give us, so we take what we can get. I had a whole bunch of other data to get into, and I've gone on way too long. I'm going to do a video about it tomorrow. Stay tuned for that. European banks are actually suspending their dividends. I've got information on the Federal Reserve that is so important. They went even further again. So definitely check that video out. Until then, if you found this one informative, just hit that thumbs up button. That's all I'm asking. Only 10% of people do that, and I really want to thank you for doing so. If you want to see different type of information, check me out on the other platforms, including Instagram and Twitter, producing content all day, every day at The Money GPS. If you're looking to make money on the side and you're thinking to yourself, I don't know, I heard about this Amazon thing. What's it all about? Do not buy a course. These courses go $1,000, $2,000 in many cases, at least for a half decent one. Trust me, I know. But I've created my own course, number one, just to disrupt that entire industry, but plain and simple, I wanted to do something for my subscribers because they were asking me, what do I do? How do I make income and so on? It's free. It's 100% free, theamazongps.com. Financial education is so important. A lot of people, unfortunately, they didn't get the memo. Well, I created these 2 books in hopes that people would read it, people would understand it, they'll learn everything they need to know, and they could be well prepared. If you want to check them out, there's a link in the description. You can get the audiobook if you prefer at themoneygps.com. If you want the how-to and the solutions, I got a playlist. It's called, check it out, How-To and Solutions. Hours and hours of content in here. I know you're going to find something so key. So don't go anywhere until you watch some of these. Click on it. I'll see you there.